Welcome to Global Money Talk, brought to you by Sanpro TV. Greetings to our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I am Remy Blaire, and joining me this morning for a market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, good morning. Happy Wednesday to you.
Good morning. Good to be here again.
Well, we are right smack dab in the middle of the week, and we are seeing the Dow and the S&P 500 near record highs, and this does come after yesterday's trading action. But yesterday we were focused on what came out of the PBOC, and overnight we got another move from the PBOC as well. So what do you make of this move from the bank?
Well, I think China is finally sort of getting serious about trying to stimulate the economy and at least sort of come in close to their 5% growth target for 2024. So what we saw overnight was the central bank cut its medium-term lending facility rate by 30 basis points from 2.3% to 2%, and that's the biggest cut they've had since they've been using this rate, since, which is about 2016. Now, there's actually slowly moving away from using that rate to manage the markets and going towards the 7-day rate, but it's still a big cut. The markets liked it, and it's continuing the sort of a big bazooka of at least monetary policy that's trying to drive them, to try and drive the markets, and that's important. You saw that Chinese markets were up, but not nearly as much as they were up the previous day. Up, depending on which index you look, up 1% or a little bit more than that. The offshore Chinese yuan traded above 7 for the first time in over a year. So dollar China below 7, the Chinese yuan rose above 7 for the first time, and it should probably stay quite strong given given the sentiment around China and that the fact the Fed is cutting. There's also, and what's more interesting is people, monetary policy is great, but are we going to get fiscal stimulus? I think we are. The question is when. The Politburo, which is a 24-member, pretty senior group of folks, are meeting ahead of the October 1st 75th anniversary of the founding of the People's Republic of China. I suppose it would be a really good time for them to be able to come out with a big package that'll make everybody happy. I don't know if the monetary policy move came up pretty quickly. Mm-hmm. They announced sort of a surprise, unscheduled press conference on Tuesday, their time, and this came out. So do they have time to get a fiscal package out before, or is the good news that they're looking at it enough and it'll come out after? But be that as it may, that's going to be really important. One of the things that came out and was very unusual is the government is doing a one-time helicopter drop of money to the extremely poor, which is probably 5 million Chinese citizens, of maybe a couple of thousand US dollars worth is what it sort of looks like. It's unclear. We don't have all the details yet, but that certainly is a step away from what they usually like to do. They don't usually like to give handouts. I think they call it welfareism, and they don't usually like that. But in this case, it's not a big group of people. It looks great ahead of the founding of the Republic of China, the People's Republic of China, 75 years ago. The other thing that came out in a Bloomberg article, and again, waiting for more details, is supposedly there is going to be a program where they start handing out sort of unemployment or Social Security benefits, I should say, to college graduates who have been out of school for 2 years and still haven't found a job. Now, youth unemployment is pretty bad in China. It's probably around the 20% region, depending on exactly what stat you look at. You've gotten a lot of stories where young graduates who spend a lot of money on their schooling are really disappointed. They haven't found the jobs they wanted. They're lying flat. They're really not, their outlook is poor. If you can get that group of people to become a little more positive, that might change the sentiment a bit. Now, it's probably going to take more than just Social Security benefits. I mean, if you're out of school, you spend a lot of money on it, you want a job. Can they create jobs? Can they find stimulus programs that really create jobs? That remains to be seen, but I think one thing that a lot of smart investors are doing who have been short China is they're covering their shorts in anticipation of what might come out. If what comes out is a little disappointing, you can always reestablish your shorts, but there's when dealing with China, I think it's always good to remember that they have more political will than really anybody. If their heart finally becomes set on we have to do this, they'll probably do it. So that's why if you're short, you might want to cover your shorts and see what happens. So I'd expect China to be relatively steady, Chinese markets to be relatively steady in the coming week or so, certainly into their holiday.
And the countdown to October 1st is on, and it's not just in China but also stateside that we're watching that date for many reasons, which we will go into.
Right.
But I think before we move away from the economy of China, you brought up an important point that it's so difficult to change the sentiment or outlook of a population overnight because
Right.
it does take time, and the youth unemployment is a key indicator of what's actually happening there, isn't it?
Right. And one reason we've seen this youth unemployment rise so high is the government started picking winners and losers a few years back. So they really de-emphasized sort of consumer goods, consumer electronics, certainly the financial center, because they felt that was contributing to inequality, which may well be true, but tech and finance can really grow at tremendous rates and it creates lots of jobs. So if you de-emphasize that sector of the economy, you're really hurting overall growth. So this is something they have to come to grips with in terms of do we want to shift our growth? Can we figure out something clever to turn this really, really large economy around? It won't be easy.
And before we move away from China, there has been headlines in the Wall Street Journal. So we heard about some of the cyber attacks that are happening on U.S. soil. But I do want to focus in on one headline we saw in the Wall Street Journal about a top economist in China going missing. Can you tell us a little bit about that?
So it's a story from the Wall Street Journal, in-depth story, and apparently this fairly high-ranking economist who worked for the government said some things on WeChat that the government didn't like. Now, honestly, from my point of view, and obviously it's translated, it certainly didn't seem very inflammatory. But nevertheless, he disappeared. Now, we know this here. I don't know if they know that in China, but it seems to be a symptom of you get some good news that they're trying to stimulate the economy, and then you get sort of these like facepalm moments where this is really sort of bad for confidence, where you can't be honest. So, for example, they censor the word deflation. So, if you say the word deflation a few times, you might get a call from somebody. And when you lose that sort of honesty and the ability for people to tell the government, like, this is your problem, people are afraid to say that. You're going to have problems finding the right rate path. And also, what we just saw this morning in terms of the cyber attacks. Yesterday, I think there was a story where the Chinese government was investigating Calvin Klein and Tommy Hilfiger for potentially not using Chinese source cotton because it may come from the northwest of China, which has some controversy in it. It's things that, on the one hand, you want to build confidence, but on the other hand, you keep taking it away. So it just doubles down on how hard their job is right now.
Yeah, and when we think about the political landscape here in the U.S. and the geopolitical landscape as well, there's so many things that are coming up right ahead of the U.S. presidential election. So November 5th, that election date that we've been all watching, is fast approaching. And ahead of that, here in the U.S. on October 1st, we'll get the vice presidential debate between Walz as well as J.D. Vance. So that is something that we're watching. But also October 1st isn't a reason we're watching. That is because the potential of a longshoreman strike in the U.S. affecting the East Coast as well as Gulf ports, and that could have severe ramifications in terms of industry as well as supply chain. So that is something that we'll be watching.
You're exactly right. About roughly $3 billion worth of goods go through those ports on the East Coast and the Gulf Coast daily. Now, this strike hasn't really made the news. I mean, it's starting to make the news now, and as we get closer to October 1st. But a lot of retailers, in anticipation of the Christmas season, have already accelerated some of their shipments in. They're trying to bring them in through the West Coast. Occasionally, they've flown things in because they don't want. Listen, I got to have my LG TV, for Christmas. I want to replace my TV. It's pretty old. So, but nevertheless, that could lead to some supply crunches, could stoke inflation a little bit. Not really on people's radar screens, but it's kind of a big deal when shipping to the east coast of the United States, it gets all held up because you have to either go through the Panama Canal. It's a much longer trip and a lot more expensive. One of the reasons why shipping costs have moved dramatically over the past weeks to months is people trying to avoid this or get it in ahead of time.
And when we think about threats to the supply chain, there are geopolitical tensions around the world. So when we talk about ports or potential disruptions, there are so many areas of the world to keep in mind. And apparently with the potential of this looming longshoreman strike, apparently for one day that the ports are closed, it'll take 6 days to recoup and restart everything. And this also reminds me of what's happening over at Boeing as well. And we know that those negotiations are going to be closely watched as we head into the end of this week, but it also speaks to the unrest and so-called unhappiness of some of these workers and those unions.
Right. I think overall unions are feeling that this is the best time we've had in a long time. Long term, I think union membership is probably not going to grow. It's just not how the U.S. economy works. We don't manufacture things. The biggest unions are probably government workers, which when you sit back and think about it, it's like, should government workers really be unionized? But I don't want to get too political there, but certainly labor looks like this is a good time for us, and we want to sort of strike while the iron's hot. But your comment made me remember that during the sort of the COVID pandemic supply chain, you'd had dozens of super tankers, not super tankers or ships parked outside of U.S. ports, and it takes a while for these folks to get back in line, get all the workers working again. So the impact close to the election may not be negligible.
And you just mentioned that the holiday shopping season is around the corner, and this year here in the United States, Thanksgiving falls later on in the month of November. So apparently there are only 27 days between Thanksgiving and Christmas. So between Black Friday and Christmas Eve, the shopping days are going to be short. So I'm sure the retailers have been preparing for this.
It matters a lot because half of the revenue, half the profit comes from really the Christmas season. So I expect you to see sales, the Prime Days, and similar things earlier in the season because you can't afford to have the Christmas season be bad if you're a U.S. retailer.
And speaking of the U.S. consumer, we're going to be getting U.S. GDP figures tomorrow morning, and we also get PC at the end of the week. But this morning we got August new home sales, and those new home sales fell less than expected in the month of August.
Right.
So for that data point that came out from the Census Bureau, sales of single-family houses fell to a seasonally adjusted annual rate of 716,000, and this was higher than forecast. So this is interesting, but this is a data point that came out last month.
Yes. I think those home sales may take a little time to work through, but one thing is we're already getting a wave of refinancings. I think they jumped maybe 15-20% from the previous mark, which is really encouraging because rates are going to continue coming down. So you're seeing, maybe it gives you a clue of how much, how much sort of backup there is in people who want to refinance or are just looking for slightly better rates. And so as we get further rate cuts, you would expect those refinancings to increase, and hopefully sales of homes to be able to go up. Certainly existing homes and new home sales for people who want to upgrade, and then all of a sudden first-time home buyers, they're finding inventory again because those previous owners were able to get a decent mortgage. So I think we'll see more and more of this. Perhaps in the first quarter, certainly in the spring, the spring selling season may be the best one we've had in several years.
And Tai, while we are here right now looking at what's happening or moving markets, let's take a look at the major stock averages. So in New York morning trade in midweek, we're seeing the Dow down by triple digits, off by nearly 200 points or nearly 0.5%. At the same time, the Nasdaq Composite Index is higher by about 0.25%, and the S&P 500 is nearly flat on the session. But we do have to keep in mind that the Dow and S&P 500 hit new records in the previous session. And very quickly, taking a look at what's moving the Dow Jones Industrial Average on this Wednesday morning, we are seeing Intel rally by 4%, but we are seeing some key names in the financial services industry, JP Morgan Chase, as well as Chevron, Boeing in the red this morning. So a lot to keep our eyes on as we head into today's trading session, Tai.
Absolutely. And on that note of data, I would just say that those crude inventories were soft. Certainly the crude stocks, the gasoline, the distillates, all lower than expected. And I think gasoline prices are at their lows maybe during the Biden administration. So you may see that we may be close to a bottom. I actually hedged my heating oil last night because I'm paying $3 a gallon for heating oil. I just locked that in. Last year I had to lock in an option at almost $4. So I ended up paying a little less, but this year I'll be paying just over $3, so which is really great. But these sort of low stocks are a little bit of a concern going forward. Now, I would say that WTI and Brent are actually lower on the day, but I think it's on the back of a big rally before, and now we're going a little sideways to see where the market goes. Again, I still think that the overall move was corrective, and we have to see if demand increases. Certainly, China, we hope that a Chinese boost would increase energy demand, but it might take a little while to filter through to the crude markets where demand has been soft.
Yeah, and as you mentioned, we did see gains for crude energy commodities yesterday, which came on the heels of those stimulus measures announced by the PBOC yesterday. So it's interesting to see that Brent and WTI are off by 1.5% today.
Right. I should also note another market that's been very sensitive to China is base metals.
Yes.
And copper and aluminum, they're all higher today, but just modestly versus the big jump they had originally. So the impact and subsequent impacts on Chinese monetary policy will probably have a little less of an impact. Now we're all waiting for that fiscal package. Not quite sure when it comes.
And I think while we're talking about energy, this might be a good time to talk about OpenAI, because we've talked last week as well as this week about the energy demands of artificial intelligence as well as data centers, right? So that's something that we want to keep in mind. And apparently at a White House meeting, OpenAI's Sam Altman pitched the Biden administration, and this was on the idea of multiple 5-gigawatt data centers across the U.S. So what do you think about this?
That's 5 gigawatts. That's a lot. 5 gigawatts is, people compare it to, that's like what 5 nuclear reactors would produce. And it's enough to power like 3 million homes, which is like Miami, right? That's big. So if you have data centers this big, and I wonder if people are just sort of projecting it like Moore's law, we grow here and we keep growing on this trajectory, how much we're going to need. It may well be true. I can't say that I'm an AI expert, but I don't know where you're going to get this energy from. We don't have. The other day we spoke about how they're bringing back one of the 3 Mile Island reactors from Microsoft, which is really amazing. But the truth is, we don't have that many sort of mothballed reactors. Our nuclear policy in this country has been awful compared to places like France, where their nuclear reactors are all the same. So it's really easy to put another one in. You know exactly what to do. Everything was slightly different, and there's a lot more resistance in this country, as in many other countries, to nuclear power. But if we really want to be low carbon and green, that is really the way to go. I'm trying to figure out how our investors can make money out of this, but that could be a lot more energy that we need. But it's a question of being able to hook it up to the grid, and the grid in this country is old. So you got to have a lot of new energy, but if you don't have it hooked up to the grid, do you actually build a power station or power generation facility close to the AI data center? You put the AI data center close to the facility. Can you maybe bypass the grid in some cases? It's all questions that we're going to have to look at, because there are a lot of bottlenecks in the U.S. energy sort of distribution system. But it really is amazing that when you talk about 5 gigawatt, sort of reactors, needs. That's big.
And I think with this demand for energy, especially as AI continues to be a burgeoning industry, we know that there's going to be climbing demand. And as you mentioned, the sustainability push. So here in New York City this week, we are having Climate Week with all the diplomats, nation state leaders, as well as policymakers gathering at the UN, and they're talking about sustainability. But when we're thinking about the reality, right, even with electric vehicles, that push, you need to be able to charge your vehicles, and you need batteries. And when we're talking about how these batteries are sourced and created, the proper recycling and disposal, there are a lot of so-called non-green elements related to this, right?
That is absolutely true. So, there are goals, there are sort of lofty goals that we want to get away from using carbon to generate our electricity, and we're pretty far away from that. We're using a lot less coal, we're using a lot more natural gas, but that's still not carbon free, and we're used to having energy when we need it. So you can have solar and you can have renewables and wind, but that might not bring you energy when you need it. And our ability our technology in terms of able to store it in battery form is still relatively rudimentary, or it's in its early days. So we're going to have to be able to produce that electricity if we want to have all these AI data centers, and that's going to come from carbon, for the foreseeable future.
Yeah, so we will definitely have to keep an eye on this sector as we move forward, and especially as AI continues to grow. So one story that I want to shift our focus to is, of course, we're counting down to the U.S. presidential election here stateside, and we've been watching other elections take place across the globe in 2024. But we do have the first round of the LDP presidential election, which will be held on Friday, September 27th in Japan. So what will you be keeping your eyes on with this?
So, this is, Japanese internal politics is relatively unknown here in the United States, and the LDP was actually the party that really controlled the government for many decades after Second World War, and whoever is now will become the head of the LDP will become the prime minister. What's particularly interesting is one of the leading candidates, a woman named Sane Takaichi. I hope I pronounced her name correctly, and she's an acolyte of former Prime Minister Shinzo Abe, whose Abenomics, he really got rates super low, below zero, maybe credited with finally getting the Japanese economy back on its feet after a generation of sort of deflation and things of what China is basically trying to avoid. And he was unfortunately assassinated in 2022 in a tremendous shock in a country that's not used to that sort of thing. But she's an acolyte of his, and it's believed that even though the Bank of Japan is independent, they listen to the government, the prime minister, more than they do in the U.S. Or in some of the Western countries. So if she becomes basically the next prime minister, it's going to make the Japanese proposed rate hikes, maybe the Bank of Japan's rate hikes, more difficult, which is why I think you've seen dollar yen, try to push a little bit higher over the last couple of sessions, because if she gets in, you might see a big rally in dollar yen. The yen might drop, maybe it moves back closer to 150 than 140. So maybe a little more opportunity for the yen carry trade.
Yeah, you do bring up a very important point, because when it comes to monetary policy and the relationship of who's in that prime position, we do see that being affected. So I was going to ask you about that, but we are nearing the end of today's session already.
Tomorrow.
As we head into the Friday session, we'll keep all of you updated. And Tai, as always, a pleasure to go through the headlines and what's moving the market. So thank you so much for joining me. And coming up next, we will be joined by Inkoo Kang, who's the ETF specialist at Grayscale. Don't go away, we'll be right back. Welcome back to Global Money Talk here at the New York Stock Exchange. The Federal Reserve cut interest rates by a jumbo 50 basis points at its September meeting. And we saw the S&P soar to record highs as investors flooded into ETFs, adding $14.7 billion to U.S.-listed ETFs the day after the decision, bringing the year-to-date inflows to $678 billion. In Q2 of 2024, as stocks rallied and investors took on more risk, defensive sectors like real estate, healthcare saw outflows, while energy, consumer discretionary, and material sector ETFs experienced outflows. In contrast, utilities and other defensive sectors saw the third strongest inflows. And this did join financials as well as other sectors. As we wrap up Q3 and head into the final quarter of 2024, I'm joined here at the New York Stock Exchange by Inkoo Kang, who's the ETF specialist at Grayscale. Well, thank you so much for joining me here today.
Thank you for having me. I'm excited to be here.
Well, as we reflect on this quarter, I do want to ask you about your attendance at the latest Future Proof gathering in Huntington Beach, California. So there are a lot of people from the New York Stock Exchange who attended as well. But tell us a little bit about your takeaway from this event, especially since you attended a previous one as well.
Yeah. So like you said, I was there the year prior, and I was so excited to go back. For me and for my firm, that place and that event is as good as it gets. This year, there was over 4,000 advisors there. The energy, the vibe, the willingness to connect, the desire to learn about the practice, about markets, about what's going on and what others are doing in their own practices. It was truly special. So an experience unlike any other. My conference schedule has kind of dwindled over the years, but that is one where certainly I was super excited to get to. For me, I had a few takeaways. The agenda was amazing. Similar to last year, there was a lot of carry forward on how to improve current practices. And I'm not just talking about like best practices, but I'm talking about it's really cool to see the wealth management industry grow in terms of its inclusion of technology, how to connect different systems, how to improve reporting, how to improve access to different types of investments for clients. And that was a big part of the agenda this year as it was last year. So that was one takeaway where it continues to be a big topic. And then beyond that, markets were certainly, with the Fed interest, sort of the FOMC meeting looming that week, kind of some of the volatility coming out of August. Markets were definitely a big topic, but something I took away was kind of the confidence that asset managers and wealth managers had over the near and intermediate term, over the next 6-12 months. The concept of soft landing, we've had jobs numbers and employment data a bit wobbly as of late, but the confidence there was really high, and that was a big takeaway for me. People were really excited about markets and sort of expected performance and expected results over the near and intermediate term. And then, on that kind of technology piece, the topic of AI was huge. It seems to be not only in the context of what's driving markets, what are some of the better performers in equity markets in particular maybe, but also how to include that type of technology into your daily life, your daily workflow, how you're covering clients, connecting with clients. That was really interesting to get the wealth management industry sort of aspect of AI and how that's kind of coming into play. So all in all, incredible. Few days there. Can't wait to go back.
And I can feel your energy from that conference here because you seem so excited. And I think I've heard the same sentiment being expressed by other attendees who went to the Huntington Beach gathering this year. And as you mentioned, this gathering took place right before the Fed rate announcement. And I heard about a lot of people coming back from the West Coast to the East Coast, and they were actually on a flight while that rate announcement was being made. But I do want to get your take on artificial intelligence. So when we're talking about wealth management and we're talking about artificial intelligence, all the applications, the use cases are exciting, but there are regulations to keep in mind as well. So tell me about what you think has the most utility when it comes to AI, and what are you excited about?
Yeah, it's a good question, and there's a lot there. So for me, it comes into I'm experiencing it today in two shapes. One is in my everyday life. I find myself using ChatGPT, using Perplexity, using these AI tools, and they've kind of taken over. You know, it's funny. I think not that long ago, you would search, right? That was what you did. You searched, and now we're getting answers like at our fingertips. And whether that's looking for food or looking for ideas on a trip or looking just for information on something I'm watching on TV, like it is really at your fingertips. Versus having to kind of go out and actively search for it. And I think that's something that hits home for a lot of people, that we're experiencing this kind of in our everyday lives. Professionally speaking, so I don't sit in the sort of advisor seat. Being at an asset manager at Grayscale, we obviously interact with clients. We have investment vehicles on behalf of our clients. We talk to our clients all the time, and there are things there where AI is sort of seeing influence already today. Just in terms of workflow, the idea of productivity, I think you can immediately feel productivity using AI tools, whether it's recording calls with either vendors or clients and kind of having something in the background, literally taking notes and delivering those to you after a call. Like, it has dramatically changed my workflow. When I do research, or when I put together content, or if I'm doing some writing for internal, to share internally, using these tools has just saved time, right? So I think productivity in my daily workflow, how I'm pulling data, aggregating data, and then ultimately turning data into intelligence, using these tools has just, I don't know, before my eyes kind of made a dramatic improvement into just my daily workflow. So both work and life, I think, speaking from my seat in particular, it's impactful. It's really impactful. So it's been really cool.
Yeah, I think many professionals are seeing the impact of AI when it comes to productivity, but I think it's also the human and their professional work experience that helps match that response we're getting from artificial intelligence. So we know that obviously when it comes to the technology sector and the AI names, especially in the Mag 7 that have been driving the gains, most likely we're still in the infancy when it comes to the application, but we have to see what it means for labor productivity going forward.
Sure.
But based on some of the conversations you had with other advisors or other attendees at the Future Proof gathering, what were they most excited about when it comes to using the technology? Is it to connect with clients, or are there other use cases as well?
So I personally, I saw a varying degree of that conversation. I think sort of from an agenda perspective and a speaker perspective and kind of the crowds that I saw forming for these speaking segments, which were heavily attended, by the way, it was more, I got the sense it was more trying to understand, learn about how others are using this technology, how it's impacting sort of other people's personal lives, their daily workflows. In my personal conversation with some advisors, the concept and kind of use case of these technologies was quite similar to mine, right? I think when I brought those two examples up, they were like, that's exactly the same feeling I'm getting. In terms of how they are in their practice specifically, I think they're finding the kind of the synergies that it's creating across the things that they're spending time on to produce, whether it is reports, whether it is aggregating data for tens, hundreds of clients across the board and kind of synthesizing that together, or whether it's kind of putting together things for them to be able to kind of pass back or pass through to clients, whether it is market intelligence, whether it is updates on what's going on in the world. I think they're finding a lot of value in that use case. But similarly, we had very similar views on kind of the immediate impact. Like you get running on a program like that, and it only takes a couple of weeks for you to be like, whoa, this is really cool, and it's really helping. Yeah.
And of course, since you're coming from that conference, we did see market reaction when it came to the Fed Reserve rate decision. So we got that bigger than expected move out from the central bank, 50 basis points. And on the heels of that, we saw a market rally. The S&P 500 Dow are near record highs. And because you're at Grayscale, I do want to ask you about what we've been seeing in crypto. So it's very interesting to see that move higher for Bitcoin as well as ETH on the heels of that rate decision. But first and foremost, what did you make of that rate announcement, and what are the implications going forward?
Yeah, so I'm torn. I, like many others, I think was a little surprised, generally because my view is that the Fed doesn't like to overly deliver surprise to the marketplace, especially when you're starting a new cycle. That's a bit of a reverse of something you just spent 2 years doing something dramatically the other way. So the other side of that, though, if you look at kind of what the market was anticipating from that cut and that move, leading into those hours of that meeting, there was actually such slight skew towards 2 cuts versus 1. So for me, I was a bit torn in that sense. I think the market reaction is generally appropriate. You know, that on that day, we did see heightened volatility. We actually saw riskier segments of the marketplace, such as the Russell 2, actually trade lower and close materially lower. But of course, it takes more than 2 hours for the market to digest what the implications of something like this is. And like you said, now we are seeing, from a performance perspective, from an ETF flows perspective, crypto certainly as sort of this short-term correlation to risky assets is performing extraordinarily well. So we're seeing this sort of risk-on appetite. And an appetite for growth and for risk and for these pockets of exposure that are not so defensive and that are leaning into making sure that they have beta, that they have this exposure to this potential kind of move into the rest of the year. So that's kind of my view. In terms of your question on crypto, we're in this pocket here. So crypto, maybe Bitcoin specifically, is quite interesting for many, many reasons. But as it pertains to, you know, the idea of risky assets, over the very long term, what we find is, given some of the properties and characteristics of Bitcoin in particular, that the correlation to stocks, I guess, as a general term, is actually quite low. But you can get these periods and these stretches of time when the correlation to something like to U.S. large, like an S&P 5 or Qs, can sit or go up into that 0.4, 0.5 range, and we're actually in that zone now. So I think what we're seeing is a bit of a broad sentiment around crypto, around Bitcoin in particular, that it is being treated as this kind of risk-on vehicle, as this risk-on macro exposure tool that is certainly feeling the tailwind of kind of the FOMC activity we just saw last week. So. And
Inkoo, you are here at the New York Stock Exchange, and as we kicked off the new year 2024, we got the launch of spot Bitcoin ETFs, and I remember that day, and that came as a very interesting New Year's surprise for us. And we also got the launch of spot ETH ETFs this year, but it is also a presidential election year, and there's been a lot of discussion regarding legislation, the regulatory ramifications of a Harris White House versus a Trump White House and the implications. But before we dive into the details, first tell me about the Bitcoin ETF landscape right now.
Sure. So like you mentioned, we now have spot Bitcoin ETFs. And sometimes I have to sort of pinch myself and remind myself that these products have only been around for 8.5 months. And in a lot of ways, maybe it is a bit of a bias from my seat in particular. It feels much longer than that. Of course, the cycle of work that was sort of put into place in the years preceding January of this year makes it kind of adds to that feeling a little bit. But the short of it is that by almost any measure, this group of spot Bitcoin ETFs that came to market in the US ETF landscape have been among the most successful ETF launches ever. And some of those metrics you might consider, is the assets they've gathered, is the volume and activity that's behind them, is how efficiently they're trading, is the adoption that we're seeing both on sort of self-directed retail, which has sort of always been the case, but especially over the last 2 quarters of reporting, the institutional adoption that's starting to pick up. We were talking about future-proof earlier, the conversations we've been having with advisors, with some of the platforms, with some of the wires. Like, it's amazing how much and how quickly and the magnitude and velocity of how that is all moving. So again, by almost any measure, these have been widely successful, and we couldn't be more excited about sort of the past 8 months, but also what the next 8, 16, 24 months look like. You know, today the group of Bitcoin ETFs sits over $50 billion in assets under management. That group has taken in over $17 billion in flows. I think you mentioned a number earlier. By way of just ETF landscape background,
Yes.
you know, we're on track to be a record year for ETF flows. Over $600 billion so far. We're on track to get close to $1 trillion in net new assets across 3,500 products. There was a point back in February where this group of just 10, 11 products was seeing a share of 5-6% of all ETF activity. I mean, that is just it's incredible to think about. So it's been fantastic, and we're really excited, mostly about the conversations we're now really having with clients, new ones, existing ones, and sort of the world opening up for institutional adoption. On the Ethereum side, again, sort of have to pinch myself. These products have only been around for 8-9 weeks, and in a lot of ways, the sort of the experience there has been a bit muted relative to Bitcoin ETFs, but again, by almost any measure of an ETF launch, they have been really successful, again, with how much they're trading on a daily basis, the flows we're seeing across those products. The adoption cycle is, from a data perspective, remains to be seen. We haven't had a reporting cycle for those products yet, but again, it's part of that progress in crypto, especially when it comes to regulated investment vehicles, and the progress that the industry making there is really exciting.
And you really made me think when you said it's only been several weeks since the launch of spot ETFs, because it does feel as though it's been much longer than that. And of course, there's a lot of work that went into that, a lot of back and forth with the regulators as well as the exchanges. So it is surprising that it's also only been nearly 9 months since the launch of spot Bitcoin ETFs as well. But you mentioned the overall ETF landscape here in the US and how it's been advancing this year, and we are edging closer to the end of the third quarter, so we'll learn more in terms of what's been happening in that space once the quarter ends. But we still have one more quarter left to go in the year of 2024. So what areas are you paying attention to when it comes to ETFs?
So crypto ETFs, certainly. Bitcoin and the Ether ETFs are what's on my screens every single day. You know, to different degrees, and probably other folks who are kind of watching these products or have added them to their screens and part of their normal, what they're looking at on a daily basis. But kind of looking a little bit bigger than that, across the ETF landscape. So I think, you know, you mentioned reporting and kind of the next quarter. You know, flows data is public and transparent every single day, which is one of the beauties of the ETF wrapper, the ETF vehicle, the transparency of those products, not only from a holdings perspective, but the usership on a daily basis. We get data every single day that tells us, you know, where money's flowing to, and on a 1-day basis, 3-day basis, 5-day basis, there may be a lot of noise in that data, but over several weeks, over several months, we get a sense of what people are allocating to, how positions are changing, how allocations or sort of relative asset choice or relative exposure choice is tilting. And you know, one thing that caught my eye, again, it's only been a little over a week's worth of data, but across the ETF landscape, you know, kind of going back to 9/15, the tilt and exposure across, and I'll just use the broadest categories possible, but equity and fixed income, almost 93% of the flow since 9/15 has been in the equity segment. And if you look under the hood, it's a lot of broad market exposures across U.S. large. I wish I saw a little bit more small cap exposure, just given that signal from a risk-on sentiment perspective. Same goes for EM maybe, but that's a whole other topic on just how much U.S. exposure is in favor relative to internationals, and that's something that's been going on for years now. But under the hood, cyclical sectors as well as defensive sectors, but your tech exposure, semis. There are certain sectors that are standing out from a flows perspective. So from where are assets going and where are dollars flowing, that data is really compelling as a trailing kind of short-term look. And if you look over kind of the year so far, that data rings true, right? About 2/3 of flow this year has gone into that sort of equity pocket, to varying degrees. And we've seen sort of money sort of kind of transfer out of short duration, and especially recently, right? And my expectation is that probably into next year and a bit longer, as we'll see about the velocity magnitude of this cutting cycle, but I expect longer duration type of exposures to be more in favor. So these are some of the things I'm watching. And all of that kind of, for me and for us at Grayscale, ties back to crypto, right? So something that I'm focused on, within my crypto seat is, I think it's really critical for us as a firm and for us, and especially clients. We talked to, this is a natural part of the conversation with clients, because crypto is Bitcoin or Ether, is part of a holistic portfolio, right? So for me, I am focused on making sure that we're well armed and well tooled and sort of understanding how they're viewing the landscape, what other exposures that they are sort of not only owning but curious about, or worried about, or thinking of, and how allocations are changing for them, especially as it pertains to implemented crypto, right? So the ETF industry and the ETF landscape it's truly remarkable, and the benefits that these tools deliver is truly remarkable, and it's really cool to see crypto now in that wrapper.
And you mentioned that you talked to a lot of stakeholders, but for potential retail investors that are watching this right now, and they're saying, well, Bitcoin might be a good investment, but when you look at the price of one Bitcoin, it is up over 40% year to date, so it is above 60,000 per Bitcoin. So when it comes to ETFs, what are the differences when you're a retail investor versus picking up, say, fractional Bitcoin?
Sure. This is a great question, and it's a question we get all the time, not only just from retail, but from our institutional clients as well. So, in crypto, there's a saying about which references owning your crypto directly. There's a saying that goes, "Not your keys, not your token." We being a crypto native firm, we believe in that sort of mantra as a sort of philosophy that is part of crypto, right? And what crypto is all about. That said, as this asset class grows and it expands to all different types of users, there's a balance there, right? And in a lot of ways, the ETF wrapper introduces that. In a lot of asset classes, the ETF vehicle itself is a critical sort of liquidity and price discovery tool. We're starting to see some of that come up in Bitcoin and Ether as an asset class. If you look at sort of what's happened since January, it's no coincidence that some of the volume during U.S. trading hours between 9:30 and 4, we've seen a higher sort of share of overall crypto volume kind of tick up during that window, right? The idea of custody, right? Through the ETF wrapper, you get the benefits of absolute institutional grade custody. Fees, right? ETFs and the low cost benefits that they offer is now available to whether you are just getting into investing and you're interested in crypto and you have a sort of small self-directed account, or you're one of the largest institutional investors in the world, right? So that from a cost benefit perspective, not only explicit costs like your expense ratio, but also the costs to transact, right? Bid-ask spreads, your ability to transact in blocks or sizes with very low friction. So the ETF wrapper, in a lot of ways, gets you that direct exposure to Bitcoin, to Ethereum, with the benefits of very low friction. It slots right into probably everything else you're doing, and it makes it really easy. It makes it really, really simple to access.
And for viewers who might not be familiar with the technology that goes into a Bitcoin versus ETH, tell us a little bit about some of the differences between those two those two crypto majors, and give us a better idea of why we're seeing some differences when it comes to flows.
Sure. So they're both, as you said, crypto majors. They're both blockchains. But what makes them unique are not only their use cases, but also sort of how they're built. You know, one being a proof of work asset, one being a proof of stake asset, are sort of two things that are starting to kind of become a bit more known and talked about now. But from a characteristic perspective, you know, we think of Bitcoin as this concept of digital gold, right? Or, you know, as you know, another way to think about it, which kind of gets into a bit of a meatier topic, is it is truly this decentralized global alternative to a monetary system, right? That's kind of the idea of Bitcoin. Ethereum as a concept and idea is quite different. I like to describe it as a tech stack that's built for the modern world. It's an applications platform. So some instances of that today, tokenization is a topic that's really heating up, and there are real use cases that we're seeing, especially in less liquid assets or things that don't have liquidity at all, kind of removing some of those frictions, right? Stable coins are a great example of that, right? Very 24/7, backed by dollar stable coins, right? That's a great example of an application that's being built on a smart contract platform. So the idea of the two assets are actually quite different. I think given the relatively nascent stage of the asset class as a whole, there are times when they behave similarly or can be treated the same or kind of go through similar periods of drawdown or volatility. But more and more, I think people are realizing, and we're seeing, that they're showcasing their idiosyncratic characteristics and functions and use cases and potential. You know, that has implications for, okay, so how do I approach this? How do I think about it? Where does it fit?
Yeah.
And that kind of speaks to the flows aspect that you brought up, which, for many reasons, I think Bitcoin is it's a bit more of an understood asset, which is a little funny if you think about it, because in my view, Ethereum, the concept of Ethereum is actually a bit more tangible, but given its longevity, its coverage, its sort of Bitcoin is certainly a more sort of known asset. So I think the flows and the adoption cycle and how clients are approaching it, its inclusion today in institutional portfolios, its adoption in sort of retail markets is significant. And in the ETF wrapper, I think we're kind of seeing that same story play out, where a lot of the activity, a lot of the flows, a lot of the attention has been on Bitcoin, and the conversation and that education cycle is just starting to kind of kick up with Ethereum. So we're excited about both, and we're for us at Grayscale, we're actually having a lot of fun telling the Ethereum story, because you know, that conversation it's in a lot of ways like brand new, right? We are getting this what is Ethereum starting point for a conversation. We are a little past that now with Bitcoin, which is fun.
And Inkoo, finally, we are heading into the final minutes of today's segment. So I do want to ask you about some of the conversations that you're having with stakeholders around the globe, because we've been taking a look at the ETF landscape here in the US, and we know some of the challenges when it comes to regulation here, but at the same time, we did get the launch of Spot Bitcoin ETF, about ETH ETFs, and there's a lot of focus on the new year as we move beyond the U.S. presidential cycle. But in terms of other regions around the globe, what are some interesting conversations that you're having when it comes to both retail as well as institutional?
Yeah, it's a great question. So Europe is a marketplace that comes to mind, just as a place that has, maybe relative to the U.S., been a bit more forward. There are sort of markets in Switzerland and Germany that have had these types of products actually out for quite some time, going back to 2015. Of course, they too are going through their own iterations of what is allowed and what is okay and what they're bringing out to market. It's gone through stages of ETNs into ETCs, but that's a market that comes to mind in terms of where Grayscale has a bit of a presence in, and we have clients in, and we talk to partners, and I would say the overall view, in my perspective, is actually quite similar. I think the conversations that are happening with maybe clients based in Europe are a bit more advanced, given that they, depending on what jurisdiction they're able to access or where they're based, but a lot of the clients out there have actually been around these exposures and have kind of touched these products and have been following Bitcoin and Ethereum especially, for a bit longer than maybe some of the clients we're talking to here. So I think the types of conversations tend to get a bit more granular. It tends to get a bit more into some of the technological advancements, maybe beyond Bitcoin and Ethereum. There's conversations happening, in assets down the cap spectrum over there. Not to say that's not happening here in the U.S., but if there is a theme, I would say maybe that's something that stands out.
And what about other regions such as the Middle East or Asia or even South America?
Yeah. So, I think part of this is this idea that Bitcoin is truly this global asset, right? So in particular, I am not having conversations directly with clients in our Latin American region, or but Asia in particular is one that stands out as well as something as a region that has seen significant, especially sort of in that retail space, adoption of crypto. So that's an area where, again, our sort of thinking there is maybe less so about, how do we educate that crowd on like what is Bitcoin and what is Ethereum, but again, we're having a bit more fun as to talking about what we're seeing on our screens, talking about like our views from a price perspective or a technical perspective. We can talk about some of the really interesting corporate actions or type of activities that are happening across protocols, and like that's where it gets really really fun. And those are certainly markets where, again, like they are really in tune with these assets, and we're able to have really fun, kind of deep dive, super technical conversations with the people touching those products out there, and that's a lot of fun.
Okay, Inkoo. Well, we are all out of time for today's segment, but thank you so much for joining me. It was a pleasure having you on the show.
Thank you for having me.
Thank
it was a lot of
you.
fun. Thank you.
And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on SamPro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for joining us, and we'll see you back tomorrow morning. Have a great day.